45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to continue talking about the treasuries, some of the selling that continues to go on there, and also kind of connect the US dollar again. We're continuing to see these things happen. Let's get into tonight's video. Well, welcome everyone. There's a fair amount to talk about, actually. We're continuing to see some interesting things happen. And last night I thought we were going to get a couple more days of buy the dips. There was a decent buy the dip trade yesterday on the S&P. We had a classic, I'll bring it up. We had a classic V top come in on the hourly chart. So hopefully those of you that have been around for a while and have the indicators caught that trade. So let's kind of look at what's going on. We're continuing just to see I don't know the best way, just rhetoric going around the streets. And there's this growing thing, and and I got an email from it, and I answered the person that sent the email about this $7 trillion that the Fed's going to have to, that the Treasury Department's going to have to raise. Well, it's really not $7 trillion. There's only about 30% of that, about $2 trillion is new money. And, so there is some challenges there, but most of the money is what's called rollover money. It's held by institutions. They just kind of roll it and it just exists. But there is about $2 trillion of new financing to come in. And if you think about it, every Treasury auction has anywhere from 2.5 to 3%, 2 times and 3 times the amount of the Treasuries being offered or being bid for. So there's usually plenty of bids around. Now, the best way to actually look for anything to go wrong, and I've talked about this before, we're one bad bond auction away from disaster, then we could have some supply issues with the new supply, but none of that comes all at once. It's spread over the next year. But it's, you have to realize in the world we live in right now with social media, YouTube, like what we're doing right now, and a lot of voices around the world, though that noise grows and gets bigger and bigger. And there's a bunch of folks I would call amateur investors that have popular YouTube channels and are talking about this, and it's a growing concern. There is some things going on here, and I've been talking about the last couple of days, been focused on the bond market. Once again, the 10-year printed up at 4.6%, and that's at the top end of that range. And I keep screaming about the 4.72% that is important to watch. And I think we'll cover the treasuries tonight just because it seems to be in vogue, but not also there's something going on there. There's definitely some selling going on. There's I don't think it's the new supply. I don't think that's an issue at the moment. Just a further comment on that is, as just with a current growth rate that's going in, a GDP growth rate across the planet, let's just normalize across the planet, that growth is going to continue to have an appetite for treasuries. I don't believe that we're going to see things go completely away from the U.S. I mean, there's nothing big enough to go there that's trustworthy enough to park cash. And that's pretty much what a lot of the treasuries, it's the safe haven money, just to put it away. And then if you have big bond portfolios, this was part of my past life, is helping banks to normalize and to protect that and hedge those assets so they don't move around so much on the balance sheets. Now, some of this stuff is hedgeable, some of it's not, but in the end, it all is. I can tell you, I've seen a lot of different strategies come in. So I'm not sure it's that big of an event, but it certainly becomes a big event if you have enough voices and enough money moving around these type of ideas. Like I've been trying to keep on top of things. There are some new, different money flows that are coming. The used to be all institutional money. All of us guys that were on the institutional side had most of the control. Now, with as big as the public markets have gotten, as big as the retail segment is, there's there's a lot of influence that comes in now, and cash flows seem to be different. I could go back and show you some books that are in my library that going back to late 80s and just talking about how normal flows of money have happened. Well, that book needs to be rewritten and talk about how cash flows go through the institutional, but through markets in general. So it's changed a lot. And of course, we have a significant asset with Bitcoin, which, by the way, did make an all-time new high today. But there's a lot of different things that have to be considered in this marketplace. And I went through a big discussion last night about how the bond market is still under a lot of pressure, and we could see a 6% or larger, larger move on the bonds than many can even imagine. I mean, 6.5% with our current debt, if that happened, that would put probably close to a $1.5–2 trillion hole in the Fed's balance sheet. And that would be something that the Feds never had to deal with before, was having this great depreciation of assets. And we've seen segments of the banking structure be affected by some of these holes and this dislocation of capital, and that could happen to the Fed too. They're not immune from that happening. So, but this is going to be something that's going to continue to be watched. I talked about it last night. These cash flows are going to be significant. There's a whole lot of scenarios running around there that, we're about to, the entire system's ready to collapse any day. I don't think that's the case. If markets panic, though, lots of things can happen. As big as it is now, it could get ugly really quick. So just a quick update on the from the standpoint of what the equity markets are doing. I mentioned last night the equity markets seem to be the only thing that's out there at the moment that's not projecting some fairly big movements. I went through everything last night. I'll probably, as I go through tonight's broadcast, I'll probably touch on some of these elements as they come up as we do our analysis. So we'll go from here, and we'll go as we usually do, and we'll set up and we'll go through the WaveTech database, and then we'll go through the indices and see where we end up at the end here. So let's go ahead and get into the index. Here we go into the database here. We are finally seeing some selling, and I've been discussing this for several days now. We're down to 67.91. We're about almost 72%. So we did see about 1,500 sells coming in for the open in the morning against about 380, 390 buys. So there's definitely a negative rotation that's going on. I think we head towards that 62 to 58 level. I've talked about that a couple of nights ago, and I've been suggesting, at least I was looking back at some of the titles of both the Substacks as well as the YouTube channel, and I've been talking about the market getting tired. Is it going to roll over? That's been going on for multiple days now, almost 2 weeks. I've been seeing that, and we've been seeing that slow roll in the indices, and now we're starting to see. We kept seeing some positive flow from the database, but that was keeping us a little bit bullish. Finally, we started to see things come below that. So the next thing that like I said, we're likely to see here in the database is for it to come back into around 62, 58%. If it can hold and stabilize there for a few days, then we can get a secondary rotation. And typically, we don't make new highs in the database during that time, but that doesn't mean the markets can't rally back. We're also doing something else I'm going to show you next. We go to into the indice analysis. Is we're coming back to the backside. We've been above the 200-day, and we're coming back to test it. I think we get through it. And I talked about some numbers last night. I've been saying this for a while because we keep going up. I was talking last night how all the rhetoric out on the mainstream financial media was, this is 6 days in a row, but that we were higher. But if you look at how much we're higher, it's just incrementally just a slight upslope. So we finally saw that midday reversal happen today, and it got fairly ugly pretty fast. And, I think we were down about 0.6, 0.7, and we bounced all the way back up to about 0.1, and then we got that reversal intraday. So there was a decent bounce buy, and then that next time down, there was no buy the dip on the next one down. And I think we may be beyond that as we go forward. But just looking at the database, we're now with just looking at the sectors. Let me blow this up a little bit here in the middle. As you can see, the numbers that are coming out here are, excuse me one second. As we look at the sector here, we're just seeing most of them are still positive, but what we're looking at is we're getting into that second half where we're getting the 3/4 of the way of the duration has went through, and we're seeing the finals start to roll a little bit. We have one index only been long 7 days. Healthcare is not really doing very well, even though it's got a current position on it. We're just not seeing any traction there. But the best has been the transportation. That's 21 of 30, so we're basically about 60+% through all of these cycles that we're in right now. So what this is telling us is that we're still in that uptrend. We're starting to start to this rotation where it's a refresh mode. So some of the early trades that came on are falling off, but we're not seeing any. We're seeing just kind of a liquidation. If we get below 58%, we could go into the next level, which would be 48, 42, which would be kind of a full kind of mid-cycle reset, and that could happen as well. So we'll see. I think the equity markets will continue to reflect this. So let's go ahead and switch over and go to the S&P here. You can see the S&P. This is what I was talking about, where we were getting this, starting to see the rollover of the PPMs and starting to roll down. It looks like we're going to see negatives down into the first week of June. So we're going to start to challenge the 200 and the 21-day. Those values right now, I'll bring those up on the side of the screen over here. 200 is at 58.02. The 40-day is at 55.79. And I was mentioning last night that I thought we could print down in that mid-55 handle. And then right now we got the 21's 57.45. So I'm going to go 5,800, 57.50 is probably the target range for a little mini correction here. What we're going to find out during that period of time, let's say it's the next 5 to 8 sessions, we're going to see whether or not we're going to start to break down further, if the database can hold together in the number of stocks and symbols that are in trend mode. Do they fall off to the point where this becomes a problem? Right now it's a little early to call, but we are looking at some downside. And, like I said, I'm just going to put this up here. This green dot is where that's 56.50. And then the next level down would be the 40-day at 55.50, just round numbers. And so I'll zero in on that as we get closer, but it does look like everything is going to start to flatten out. The only thing that's positive, we're seeing some potential uptick in the momentum on the 40-day, but that's the 55 handle that I just mentioned. So we could probably start to see that bounce. We'll see if we can get through the 200. Like I said, 50, we'll just kind of round these numbers out. 5,800 to 57.50 is probably going to be the downside of this particular move. And that bounce will tell us whether if there's any, what I always refer to as there's any VIG in this thing, and we can start to see it follow through. My guess is that we'll probably cycle sideways along the 21, and then ultimately we'll see the 40 period moving average or get down into that 50, that 57, 50, 5,500 potential here. This is not setting up, and I've been saying this for a while, that this is not the formation that we're going to see an all-time, a new high on from this standpoint. It's just not playing out. And like I said, if the database gets below 58%, then that's going to tell us there's a little bit more in this than what we think right now. I want to bring up the weekly because this kind of confirms this idea. You can see weekly, we're right into the 40-week, 21-week averages. Let me just bring this up on the far side here. I'll blow it up so you can see it over here. So this green is the 40, 50, there's that 58 number. Here's the 57, 80. Those are the numbers that we're going to have to watch pretty close. And I think that there's a fairly high probability we're going to start to reach some of these numbers here as we go forward. So let's go ahead and let's move on to NASDAQ. We'll get to some of the more interesting areas. I talked about last night, we got that new Fibonacci targets this is a weekly on the NASDAQ. And the probabilities will start to wane, but you can see here, and I was mentioning this, let me draw this in so I make sure everybody's looking at the same point. So this area right here is going to be where we're likely to come into, trade up into this weekly. So we're starting here on NASDAQ with the weekly. So we're going to focus here. We see over here the PPM1 is actually forecasting a higher price. But if we get much below the 21-week moving average, which is, I can't see it right now, I'll bring that value up in a minute. But if we get to that level, then, if we get to that level, then we can start to do a little bit of an analysis from that standpoint. Let's go to the daily, just take a look at that, see how this is lining up together here. So this is going to look somewhat like this is going to look somewhat like the S&P. You see there's still pretty good momentum. One of the features that I put in the Substack, I've been trying to make sure that I do some comparison analysis between what the S&P formation's doing and the NASDAQ. And the NASDAQ typically will have a bit higher beta, and it will have a little more volatility from that standpoint because it's just normal because of the relative betas. And so this 10-period moving average is likely to be a pretty good support level. That's 21,179. We're currently trading 21,690, so we're just below that, but that's still going to have some supportive factors here. So if we look at the market grid for today and overnight to and tomorrow, we're looking at S1 2105, all that. I just remembered I did run the data sheet, so while we're still kind of talking, as I always tell you, the NASDAQ and the S&P are cousins. So let me bring up this other sheet here that I did do the I did run that fact sheet for the S&P. So we still have, it's interesting, even though we had that big down day, we're still seeing the metrics. We're still in trend mode here. I just want you to look at ppm1, 0.29, 0.37, and 0.004. So the ppm1 and 2 are still in trend mode up, which tells you, and this is the same thing with the NASDAQ we were just looking at, is that underlying that 10-period moving average is still going to be a point. So we could see a little bit of a trade bounce out of here. There's still characteristics that says that the market wants to remain above that scenario. And if you've been around the channel for a while, what the whole PPM structure, which is price, pressure, momentum, what tells us is about the angle of attack of a moving average and the probabilities for it to remain above or penetrate and decline below an average, or the inverse on a downtrend if it's going down, that for it to stay below that average if it's trending and has a strong enough angle of attack. So at 0.29, 0.25 is minimum, but there's still characteristics that says that the market wants to stay above that 10, just a simple SMA 10-period moving average. It wants to stay above that value. All the way down to 0.15 is the minimum, but 0.25 or greater is about right now that gives us about a 40% probability, and it's to penetrate. So otherwise there's still like a 65% probability for the market to stay above that. And when we look at the analysis of this sheet, that's what it's most likely to tell us. So here, let's just look at what the analysis was. Strong short-term bullish momentum with underlying neutrality, right? So then consolidation below R1, strong momentum reading. So that's what it's picking up on, is that 0.25. Remember, I programmed the logic here, is if it's 0.25, you have to recognize that that is a valid trend, and then the values are accordingly. So we come down here and we just, we'll blow this over here, the support and resistance. This is the market grid, right? So 55.80 upside is the target, and on the downside right now, we're kind of 58.37, 58.13. These are numbers that we printed overnight yesterday, and after the big rally and then the sell-off again today, we've got those numbers back in focus again. So back to the NASDAQ, the same patterns exist from that standpoint. We're still looking at the probabilities to stay at or on either side, but still maintaining that slope to the upside. There's still, I want to say, we're looking at into Monday, Tuesday next week. There's still a reasonable, at least a projection from the standpoint of what the momentum's doing, is likely to keep that angle of attack. So we're going to hang around this 10-period moving average, and that upslope that's being projected here on the dotted lines is the forecast. So if I just bring this up, you can see it's forecasting to flatten off a little bit. That number there is 21,490. So right in that range. So it's going to want to stay in here. We do have a downward slope here in the market grid. So that if we close lower again, we could see an extension, and ultimately we're heading probably towards, this is the daily chart, the 21-day moving average, and that's going to be, 20,700 or so, something like that in that range. So let's do next. Let's go and do we'll go from here right to the treasuries. And I think this story is interesting. I mean, we just kind of blew up today, and I've been advertising a breakout point. I just want to bring this daily chart up because these values are valid here. 4.83, 510, 527. That's these 3 Fibonacci targets above here. And you can, where these are coming from, let me draw this in so you can see. This is coming from the WaveTech algorithm for the Fibonacci projection tool. And so this is what it's picking up on here. So we've got this pattern here. Where we're getting pretty good structure, and this is where this is being, these numbers up here is what's being projected from this tool, and it's picking up this low and this low, the high here. So it's picking up this low, this high, and then this low, and it's projecting that pattern up into these fib targets, which are the numbers I just mentioned. 480, 510, 521, right? So that's what these targets are. I think if we break out, this is that around that 472 level, these old highs up here, we break this out, it's just going to confirm that we're going to print something higher than 5%, and that could be in this particular sequence. But I'm gonna throw a little bit of water on this forecast just for a second, because what we want to look at here is, are we getting confirmations from the PPMs that there's big growth? And the answer is no on the daily. We're not getting that, and in fact, we have a potential, what I call a V top being forecasted, that today two things happened. So while the fib targets are there, we can definitely run if there's something big underlying going on, but the technicals are saying that we're probably going to come back in the range. I've been talking for months about this 395, 440 range. This is 460, so we're definitely printing outside of that range, and there's something to continue to drive that. And I tied together in the last couple of videos talking about how the decline in the dollar is coinciding with the move in the treasuries. And typically when that happens, it's usually foreign money coming out. Something's is happening in the bond market that hasn't been happening. Now, whether that's a rejection of the current administration's policies or they're moving money around for whatever reason, there seems to be this is a big market we're talking about here. This is like probably 15, 20 times bigger than the equity markets, right? So when this market moves, and especially when it starts to move like it is, there's some big numbers flowing around this market from the standpoint of cash flow and trading on this. This is, next to currency, is the biggest market there is, right? So we're seeing these turnarounds being forecasted, this little V tops here. Let me just draw that in, because if you're new to the channel, you won't know what I'm talking about. But there, in the indicator, there's these little little V tops that happen. Now, the forecast in ppm1 is fairly dramatic and looks significant. The other V's are really not so significant. We do have an expansion here on the ppm 200, and that's significant, but everything wants to come back in and normalize. So that's the other thing that happened on this is a daily chart on the treasuries. The other thing that happened here is that we got a RTX sell signal. They're not as good as the STX buys, but they do often will signal, well, we're going to go sideways and then come back into the range. And 460 is getting close to that 472 breakout number. But that, if 472 gets broken, then everything's off the docket, so to speak. Let's go to a weekly real quick just to kind of tie this together. So we're also right at the upper end of the range of the weekly, and I think I showed you this chart the other day, but there's some new, these are the some of the scary numbers. We get some new fib targets on the weekly coming out, and we'll go forward looking and see if we're getting confirmation on the ppms. But right now, those numbers right now, see if I can blow those up and bring them up on screen here. You'll see them over here. They're high target 1, 509, 555, and 584. If we go to the monthly chart, there's 6 handles being forecasted. So this pattern that I was breaking down before, this is the big swing pattern that's out there, and those key levels right here. This high right here was 481, and I forget where I got the 472 number. I think it was off a monthly pivot. But this is a big number, because if we start to break above here, it starts to confirm these higher ranges, and that is not good. And the equity markets aren't going to like that in the end. So possibly we get that. If you recall, and I haven't talked about it, so maybe tomorrow night. And we do have a long weekend coming up. I'll let you know tomorrow what the schedule looks like, both for the Substack and for the channel here. But these are big swing projections. The fact that they exist doesn't mean that that's what's going to happen. But what we're seeing here is there is some projection here on the 10 to accelerate. So that puts a little bit of pressure on the analysis side. The analysis side, which means that we could get this breakout. And what would happen if we get that breakout? These other algos are going to kick in and start to show growth or momentum growth, which in this case would be higher yields. So there is a fair amount of risk in the bond market right now, and I'm acknowledging it. I don't. My argument on equities that I just went through is I do not see some big bull market, and we're about to go to the moon, as some folks will come on the channel and say that's not what's being forecasted. This risk is starting to grow, and I have not been able to really nail it down. Whether is it the fear of this $2 trillion of new money to be raised? What is it? We don't know right now. That's the beauty of being a technician and being a quant, because you don't have to have those answers, but we do know fundamentally that those answers will come in to view. So maybe there's something we don't know about yet. And like I presented last night, is this could be, a failure, trade wars. There could be a lot of things that are promoted by the current administration as everything's wonderful and it's all going to work out and be good, to the opposite, where everything fails and there's trade wars and inflation and all kinds of stuff. The unfortunate part of this scenario is there's not much the Fed's going to be able to do to halt this going on. And in fact, the dovish stance come out if they tried to come in and lower the front end of the yields is going to confirm there's something else wrong. So they're kind of stuck here. And I've been saying this for a while, is that there's nothing for the Fed to do, and they have to be quite careful because they could signal to the bond vigilantes that, hey, it's time to sell and sell hard. And you get all these numbers I'm talking about here from the standpoint of printing up into the mid-5 handle on the 10-year. So that's something that it could be really good. So I'm kind of resinking my putt about 3 times, but this is where the risk lies right now. For whatever reason, it's there, and it's showing itself in a lot of ways, and that's why I went through the last 2 videos. I've kind of focused in on this, and that's okay to focus because you don't want to just blow it off, because I think this is the biggest story in the markets right now that's building. And, so, and like I said, the sentiment around this is building as well. And it doesn't matter whether, it's the influences that causes the cash flow to change. And right now the cash flow is out on this one, out on the dollar. So that's growing story, and we're seeing Bitcoin start to break. So that's another element. So let's do this. We'll do gold. We'll do gold and Bitcoin. If you have some things on your mind, put it in the timeline. Maybe we'll get a chance to chat about some things. A lot of times, sometimes somebody will ask a question and it will trigger some deeper thought on something. So please don't be bashful. Do that. So let's go ahead and take a look at we'll go to GC, we'll go to the gold. And gold is still within that wedge. And if we went back, I remember weeks ago, I told you one of the things that's going to have to happen is we're going to have to normalize this high volatility bubble that occurred, and we're still working on that. I suspect if the markets were to close, and this is a weekly graph we're looking at, if we look at the next week out, we're going to see the market grid probably turn up on the bottom and maybe flatten, but it's going to start to narrow as far as the ranges go. The volatility is still quite high on this index. If you have Substack, you can go back, I think, 2 Substack letters ago. I don't know what happens, by the way, with if you just do a subscription, a free subscription, you might be able to go back. I'm not sure if you can see yesterday's publication. I don't know how it works, to be honest with you. But if you go back a couple of those ago, you'll notice that I ran 2 days ago. I ran the weekly analysis of the data sheet for gold, for the treasuries, and for Bitcoin. So that was significant. It broadens out the range and expectations and looks at more of the intermediate trends. Now, the intermediate trends on gold are still firmly up. We did trade down below that 10-period moving average. And I want to point out something here. You'll see it here. We spiked all the way down to the RTX or STX level on the extreme last week. But notice we rallied back and we closed above the 10. So what happens when you have this angle of attack like what we're seeing here now is the market wants to close or stay above that rising 10. So we still have that value, and it's continuing to rise in the pattern. So I don't see anything changing. We look at the PPMs, they're flattening out, but we're still at pretty robust levels. Like I'm putting my cursor here down around the second derivative. That's still a 0.85 positive trend. So even if the momentum continues to bleed off, let me look at this low here that's being projected. Yeah, even projecting all the way down to where my cursor, where the finger is there right now, even if we go to that level, we're still at a plus 0.25 plus. We're still in trend mode. So that tells us that that 10 period moving average is going to stay in play. I told you I went below that, but anything down to that is your buy the dip mode on gold. And just on a weekly SMA, simple moving average, no fancy math, just simple math. And that's what the indicators are saying, that there's going to be adequate amount of upward slope or angle of attack to maintain that value. So watch that closely. You can learn a little bit in real time, but when we go to the PPM2, it's even stronger, but that's way out of play right now because the 21-day or 21-week moving average right now is at 3,023. It's not even in the view of what's going on in the markets right now, but this 10 will be very dominant as we go through there. Take a quick look at the dailies just to give some short-term analysis. We saw the turnaround happen a couple of days ago. We had some fib targets down here. I'll blow this up over on the side so you can see this, but the downward fib targets 31.47, 30, 20, 32, and 29.62. If we look back at the data here, we printed down to here to 31.23, so 31.47, so just a touch below that number, and then we bounced back up. Like I said, I would use the weekly parameters. If you have the indicators, use the market grid on the weekly. You should be able to zero this thing in. But there's definitely that 10-week moving average is going to be where you're going to play there. So let's get to the bid market at hand and talk about what's going on here. We'll stay with the daily. We're continuing to move. It's the same scenario on Bitcoin, that we have this upward bias. Now, what's interesting, we printed 110, 183, so that's a new high in the pattern. 109.8 something was the old high, and depending on what exchange you're looking at, that number varies a little bit. But that was kind of the high water mark that we were watching. And we're seeing, and this, I keep calling this a historic moment in Bitcoin because you have to follow through here. It doesn't have to do it immediately, but you cannot, 105, 100,000, those numbers are going to be significant. If you drop back below those numbers, that could be viewed as a failure, and some very bad things will happen if that happens. Right now, we'll go to the weekly chart and finish this off right. But what we're looking at is a decent upslope here. The red dot indicator is kind of flattening out. That's okay, but you need to run here. If you get the breakout that everybody's been talking about for 3 months and there's no VIG, there's nobody showing up, that's a warning sign. The other thing I've been talking about when it comes to Bitcoin is that you're really looking at, all these market makers. And I think from a Bitcoin's perspective, I think, and I know I'm a broken record on this, but I think it was a really, everybody trying to legitimize the Bitcoin is that they think that the ETFs and all of that was the way to do it with options and ETFs, and therefore Wall Street and market makers and all those guys getting involved. I don't think that was the demise of Bitcoin, but I do not think it was as positive as it was built up to be. And that's why let's flip over here and go to a weekly chart to illustrate what I'm talking about here. That's why we did this distribution mess. And then we came down, we came in to support this fib target. Was interesting. I'm just going to bring this up here real quick. If we come over here, there was a fib target at 76,200, and the low on that was 76,600 was the low. So we came right into that fib target, and that was where there was one more where we went just below that. I think it was 74. Yeah, 74. 434 was that low. We went below it, and that's where we got that's where this rally started from. Right once we broke that number, this green dots here was my line in the sand. If we would have broke that, then I think we would have went down substantially. I think we could have seen 50,000 on Bitcoin. That's not what happened. It never was penetrated. This week's reversal that happened was the beginning of this rally, and there's a lot of times when you get this deep of correction and you get to the new high, you know there's nobody left to buy this up. So you got to keep finding new players. And if you got the market makers, I'm going to bring them back in the room. You get the market makers and all these guys doing arbitrage and selling and doing all the stuff that Wall Street does, that can put a cap on this market. So the fact that we've made a new high, my opinion, we got to run. There's a couple targets. There's a 13,000 target, but the big targets are 121, 136. I say we go there right away, or we could have some issues that come in. Let me rescale this a little bit so we get a better picture. So what the algos are telling us is that we've got some strong positive bias into the end of June. So the tables are set. Here's the Fibonacci targets up here I was just talking about. Let me blow that up and bring it up on screen so you can see it. Right here, 134. So I said 131, 134. These are fairly new numbers. 157 and 171,000. Those targets, based on what we're looking at, those are the targets that we're looking for here. So this is where we start the move to 200. And Michael Saylor is a really happy guy, right? But there's a but here. We're seeing the momentum we've got until really the end of June. So we've got, let's call it 6 weeks plus for this event to at least hit that Fib target 1, which is 134, 131, 134. I know I had a 131 number that's stuck in my head, and I always tell people, you know, I'm getting senile when I start dropping those numbers and I don't remember those. So those numbers are stuck. So that we should go there. Okay. There should be not a lot of hesitation. We're into new ground. It needs to roll, and the positive momentum will stay in place. If we look even down here at this, let me blow this up so you can see this a little bit. It doesn't look like much. I can't show you the numbers at the moment, but this red line right here, the ppm2, is at a 0.86, which is very bullish. It's 3 times the minimum trend level. So the angle of attack on all of this stuff, if I come back up here and zero in on just the prices here, the everything, you can see this rolling up, everything's positive. So I'm just going to be on record as saying now's the time. Got to stay over 105. Got to be well over. You can't go back under 100 now. Under 100 could be an absolute disaster, and I think the probabilities of that at the moment is not very high. Okay, so we've got roughly about 10 minutes. Let me look and see what some of you folks are chatting about out there and see if there's anything I can come in. Yeah, I talked about, just real quick, Bear Market Vibes had a question. Do you think it's inevitable that the U.S. dollar strengthens by some measure, perhaps like government-induced? That what's going to do that is they need to get these deals done. So Trump can head off all of this stuff, and Bassett and the folks, all they got to do is get the deals done. Okay, stop talking, stop jawboning, get the deals done. They talk about the UK deal. The UK deal was not a deal. There were some agreements made on certain products and certain things, but it's far from a deal and it's far from being inked in. And the only thing I could say, the positive thing is the Middle East deals look like most of those are inked, and so those are real from capital investments. But when it comes to the trade that's going on, there are no deals. And it kind of angers me when I hear that people are talking about, well, the UK deal. No, there is no UK deal. And so as far as the U.S. dollar, if you go back 2 videos ago, I covered the U.S. dollar. It does look like it's trying to bottom on a weekly intermediate level, but there's still some incremental downside here. And what can happen in markets like this is if you break certain numbers, then everything gets broken and none of this stuff matters. It just goes down and accelerates and all that. So there's not a lot there. So okay, I'm just looking at some other comments here real quick, so bear with me. Yeah, I actually mentioned that somebody's talking about the one bond auction, bad bond auction away from disaster. Those are the things to do. Yeah, I think, Bo, I saw your question just now, 4-4. I think it's 6-6, but let's I'm going to take a look and confirm. Yeah, 6-6 on the settings on the fib ratio. So if anybody's got the indicators or looking at that, I have things set on the strength is 6 and 6, not 4 and 4. I think the indicators are defaulted at 4-4, but I would go between those two to see how the patterns are fitting best. See what else we got out here, folks. Yeah, and David Ford is absolutely correct. What's the trade deals anyway? So here's the way that they do break them. I don't think China's ever adhered to anything. So the only way you can do that is to be proactive and make consequences, and you can charge them on the way in. So if they break it, then they get penalized. That's probably one of the biggest problems with our society today, being an older guy, is this lack of what appears to be consequences. So I won't expand beyond that, because then that becomes not controversial. Just it is what it is. Let me look at a couple other things. I'm just looking at some comments here, folks, so bear with me. Yeah, so way back, David said if we go above 5%, we're up shit creek, and a barbed wire canoe. Yeah, and you have to understand, and this what just talking about the bond market in general is this is a material big market, right? So currency represents all of the dollars out there, and then you get the bond market, and is the really biggest traded market next to currency, and then equities are not even relevant when you look at the size of the trillions and trillions of dollars in sovereign debt across the planet. It is the market. So if you start to see the lack of confidence, whatever selling, and the bond vigilantes get in, then you have that problem. This came up. I've just had the name of the movie, but we talked about the Chris Christopherson movie, and they're talking about, I think it was, at the time it was a Saudi selling debt. It was a 1980s movie, and I can't believe I'm forgetting the name right now. But what the scenario was painting is that there were going to be massive selling of dollar assets that were going to cause the changes on all the balance sheets of the banks. listen, if that something like that happens, the system's just going to go completely down the tube, and we won't. The New York Stock Exchange won't even open if something like that happens. So, I have spent my career watching these markets, and I never went down the trail of that, because anybody that is going down, whether it's my friend Peter Schiff, or whoever wants to go down this complete collapse of the system, then if they haven't closed their mutual funds, if they are still involved in the community, then they're just saying what they're saying because they don't really believe it. It makes them money. And what I'm saying is, we'll have signs. If that stuff is happening, we'll all be heading for our bunkers, okay? And I don't go down the bunker trail. There's no relevant reason to do that. There are lots of things that can be done, maybe none of them pretty, whether it's things like we saw back in the days of the illness in 2020, and where we saw the Fed just open spreadsheet, add zeros, hit save, close spreadsheet, add money. That's how long it took them to add trillions of dollars. They could do that. Is that going to save the system? I don't know. It comes down to society and how all of us are thinking and what we believe. And the only thing I know right now, we still all believe in the system, or we wouldn't be sitting here spending our time looking at markets, doing analysis. Because if we don't, the screens are all black, right? There's no reason to talk about. If you really believe that was the case, you wouldn't be doing this. I don't think it is the case. I think the governments have a lot of power through legislature, whether they've got to stop trading. They'll do whatever it takes to survive. And it's just like the corporations that have the big numbers. They'll do whatever it takes. They'll lie, steal, shut down, discount, whatever it takes to survive. They'll do that. So we're going to know things are really broken if that happens. And it's certainly, I think what Trump and the administration is trying to do right now is to cut expenses, try to get this. The only way out of this, and if you go back and read my 2024 outlook, the only way out of this mess is we have to grow our way out. We have to create more GDP than the debt. You change the GDP ratio, not by taking off debt, but by growing out of it. You change the ratios through the growth. And that's what I said 2 years ago. I kind of touched on it in this year's outlook. This year's outlook was somewhat optimistic if you read it, but I'm still looking to 26, 27 as places where things can go. So I think that'll probably finish that. I appreciate everybody being here and having these comments, because this makes this channel much more viable. And so anyway, I'm still back. Everything's going good. Let's just keep going. We'll see you tomorrow. This will be the final report. Like I said, by tomorrow I'll put a schedule together for the Substack and for the YouTube channel going through the holiday weekend. And I guess everybody can enjoy the Indy 500 and enjoy the race. Have a good weekend. Be safe. We'll see you tomorrow night. But I know that I'll set up the schedule, like I said. So thanks again for watching, and we'll talk to you real soon.